Hey, all, welcome to Equity Guru. I'm talking to Ken Dontramont from Medexus Pharmaceutical. MDP is the ticker symbol. We've talked, I think, more than I've talked to my ex-wife in the last year, Ken.
It's good to see you, Chris. I'm in that enviable position, I guess.
I have to take you out to dinner sometime. Um, so MDP, for those that are new to the story, we've been talking with you for, I guess, about a year now almost. The company's gone through it a little bit. There's been a few FDA delays on some medications that you've been rolling through there. It seems that every time there's negativity, you get hammered, and when there's positivity, it goes up a little bit. What do you put that down to?
Yeah, I think everybody's focused on the negative aspects of the market these days, just looking at bad news and not recognizing there are companies like ours that are making significant progress in spite of the headwinds that the market is providing. And Medexus, I think, is in really good shape. We're continuing to make progress. We put news out about our revenue a week or so ago, and it's really positive.
Tell us about that revenue. What does it look like on an annual basis right now?
Yeah, sure. So last year, I think we were about 77 million. These are all US dollars. So we were 77 in revenue last year. We put out that we expect to be between 107 and 108 this year. And so, that's really fantastic growth year over year. And then we'll report the full financials probably mid-June. This is our year end, so it takes a little longer to report. But clearly, with strong revenue number like that, we expect to have pretty solid numbers.
And where does that leave you on in terms of EBITDA?
Yeah, I think last quarter we put out that we're around $5 million of positive EBITDA on 27-ish of revenue. We put out that this quarter is between, I think we said 27 and 28 million of revenue. So, it wouldn't be a stretch to think that the EBITDA number should be similar. So we're kind of into the new normal now.
Yeah.
We've had this will be the second full quarter of having Gleolan in our numbers. And you can see the consistency of the revenue. So we would expect some consistency within the EBITDA number. And then, now that we've increased the amount of working capital for bringing on that new business in Gleolan, that will stabilize. And, we would expect that going forward, we're going to see increases in free cash flow as well.
So all of that looks like a de-risking where I come from. You had a situation where you had some debt that was coming due. You reformulated that debt and got into better shape. Market didn't really reward that. You had new medications in your list. Market hasn't really rewarded that. Your revenues are up and consistently so. Your EBITDA is positive. Market hasn't really rewarded that. Like, what do you think we need to get to for the market to finally sit up and stop discounting the positive stuff that you've been doing?
Yeah, I think it's just consistency of our results. So we're now showing consistent numbers. I mean, I think this is quarter 5 or 6 of positive EBITDA. In the last few quarters that we've reported have been, in the $5 million range of EBITDA. So I think as the market sees, these numbers are really solid and consistent and durable. They'll start to see that. And then as new business comes on, clearly that's going to help a lot. The refinancing the debt is something I don't think people recognized appropriately. Hey, we saved 3 percentage points on refinancing that debt. Went from a mid-tier bank in mid-cap to a tier 1 bank in BMO. So clearly, that's a major step forward. Now we've got a really good partner that's going to be there to help support our growth as we go forward. And we expect to do that in a profitable fashion.
So where does your market cap sit now with all of those numbers, with $100 million plus US and positivity in terms of the bottom line? What's your market cap today?
Yeah, it's pretty small. It's way below where it ought to be. Yeah, just looking at it now, about 29 million bucks. So
So
it's a
you're trading
fraction of what our annual revenue is, which is
a
kind of
quarter of your
uh,
annual revenue. That's crazy.
yeah, yeah.
Like
It's tiny.
that's almost an arbitrage. Like you've got to be tempted yourself to be going out there and finding pocket change to go and get as many shares as you can under your wing.
Yeah, absolutely. As you know, I'm a pretty significant shareholder now. I own about 8% of it. So, clearly, I think that my money is well positioned. As we continue to advance this story, I do expect to see the appreciation in the share price, and obviously, I'll benefit from that.
Now, obviously, the analysts are looking at those numbers and saying similar, right?
Yeah, I think most of the analysts, or several of the analysts, have $3 targets on us. So that's a double from where we're sitting here today, without a whole lot of effort. It's not like anything significant's got to happen. We just keep executing on what we're doing.
Mm-hmm.
So that's the I think really the message that investors should see is that, hey, we've had about a 40% compound annual growth in revenue. And we keep delivering on that. And as we do that and don't increase the spending to support these drugs, obviously a lot of that drops to the bottom line. That's the magic of this business model. We've got the whole infrastructure built out, and so as revenue grows at a 60% margin, a lot of that drops to the bottom line. So we're in a period of time now where we're really using that leverage that we have to produce really good results.
It's I guess from my perspective, as somebody who watches the retail market, it's no shocker to anyone in Canada to say that the Canadian retail med tech and biotech investor is a pretty small group of people. We're big in resources. There's still people who put money into cannabis for some reason. But when it comes to technology, it seems like there's a real disconnect in the Canadian market. Is it a burden to be listed in Canada in your space?
Certainly a challenge because you're right. There are few true healthcare investors. It's not a very big pool. There's a lot of generalists, and generalists in Canada don't typically follow healthcare that closely, unlike the U.S., where because healthcare in the U.S. is such a big sector, even generalists, have got a really good handle on healthcare, and so they would clearly be following many healthcare companies. In Canada, that's not the case. I mean, it's a very small pool. There's only a few companies. There's only an even smaller group of companies that are EBITDA positive and making money, like
Sure.
Medexus. And
Yeah.
so, that's what we're trying to get out to investors. That look, our products may be complex, and the diseases we treat may be complex, but our business model is really quite simple. We've got a really strong revenue line that's growing, a very stable SG&A line at 60% gross margin. So that growth, uses the leverage of our infrastructure to produce really good returns. So the business model is really quite simple.
Mm-hmm.
Our products are complicated, but you don't really have to know much about our products to really get the business model.
Sure. And then part of that business model is an ongoing search for new opportunities to license already approved medications in a lot of cases.
Yeah, absolutely. So, now that we've got, all these salespeople, all this expertise in the market, we become an attractive partner for a lot of companies that are either developing drugs or have drugs from other continents like Western Europe that are looking to enter the US and Canada. It's a much less expensive way to partner those products than to try and do it on your own. It costs tens of millions of dollars to get set up in the US, and we're already there. So that's an easier path for many of these companies than trying to do it themselves.
A lot of small to mid-range pharmaceutical companies in Canada, they're one SKU outfits, right? They've got one thing that they've managed to acquire. Then they've got to go out there and build a sales pipeline, do the marketing. It's very capital intensive. You've already done that work. Like if you bring in a new SKU tomorrow, do you need to bring on new salespeople, or are you already good to go?
Yeah, typically not. And if we do, it's only a few. So it's not building a whole group.
Right.
I think we've got 17 now with terbinafine a few weeks ago. We've got 18 products. And so, the single product risk does not exist in this company. It's spread out over a broad portfolio. And
Right.
so, yes, the infrastructure is built out. Each time we bring a new product in, it just gets layered on top of what we've already got and utilizes the infrastructure that's in place. In both US and Canada, we're about 100 people in total. And so both US and Canada are completely built out from the commercial infrastructure. So we can easily take on more products without adding a lot of expense.
And in a very general sense, like I guess one of the beauties of the orphan drug business is you might only have 50 doctors in North America that are specialists in a given area that you're applying to. So you don't have to go out to Albuquerque and Maryland and Rhode Island, and you're basically zeroing in on the guys that are treating the specific illness or condition, which
Right.
strikes me as being a much cheaper enterprise.
Right. Yeah. So we don't need big sales forces, I think is really the trick. You don't need hundreds of people to reach these targets. You need, a few dozen.
Right.
And so that's much easier to carry. And with, drugs with good revenue lines and good margins, then, obviously it becomes quite profitable. And, the fact that we're already, at profitability is really the magic.
So everything from here is cream. I guess the compulsion would be to go out there and grab as much new licensing as possible to really ramp that margin up. But what is the process that you actually go through before you lock something down?
Yeah, I mean, it's a constant effort in business development, looking for whether it be licenses or M&A activity, just looking for products that are targeting the same institutions or the same physicians that we're already speaking to, and so
Right.
we're constantly at conventions and talking to partners and other sources of product ideas, evaluating those, and the good ones, obviously we bring in. So we've been successful every year bringing, one, two, sometimes more products to build that portfolio. Every year we've done that.
And it's not just a case of bringing in, any old thing. It's things that, best of breed, things that are already through the pipeline, maybe even showing some existing sales.
Yeah, absolutely. Like terbinafine is our most recent product that we licensed, I think a month or so ago. That's a market that's about 80 million bucks in Canada. The product's got an advantage over the current market leader. And so, we get that product approved, drive it to peak sales. That'll make a very significant contribution. And so it's looking for products like that got, something that's going to be, give them a competitive advantage and drive to a significant revenue number. Right. So that's what we're looking for. We're not just looking for any old thing just to plug it in. We're
Right.
looking for things that are very synergistic with what we're already doing.
So no Flintstone vitamin competitors. um, do you keep an eye? This might be a bit outside the box question, but do you keep an eye on sort of non-traditional pharmaceutical options that are popping up, things that are maybe cannabis related, maybe psychedelics related, things like that, or are you really sort of the suit and tie end of town?
Yeah, we're really focused on what we do well, which
Yep.
is, the institutional sell and hospitals, the physician sell, retail pharmacy. So, we're laser focused on that. So we're not looking to expand our business, beyond where we are, because that would take a significant investment. But our model is let's just keep leveraging what we've got. There's plenty of business doing what we do. I mean,
Sure.
there are many companies that have gone from kind of where we are now to many multiples of the revenue that we have now. With this same business model.
Obviously, with the Treosulfan endeavor to roll that through FDA, it's taken a lot longer than you'd want, and I think negatively affected the share price probably way more than it should have. But Has that sort of put the frighteners on you in terms of not wanting to go near something that might require similar approval, or are you convinced that that's a one-off situation? Maybe there are lessons learned. Maybe, there's opportunities going forward.
Yeah, we've gotten products registered many, many, many times over. In fact, this is the first time one's had a significant delay like this. And so,
Mm-hmm.
oh, I mean, this happens. It's unfortunate. We hate the fact that it happened and caused this delay, but it happens. And, product approvals sometimes take a long time.
Mm-hmm.
So it doesn't deter us. We still are confident that this drug should be approved. It has very significant improvement in survival for these patients. And so we think eventually it will get approved, and that will be a really positive thing for existing shareholders, because you think, we've only got 20 million shares outstanding. So you get a Treosulfan approved, which, can be over $100 million drug, and all that benefit accrues to existing shareholders. That would be a big win.
Pharmaceutical industry's kind of come under fire in the last few years for, profiteering, I guess is really the word for it. Especially in the US, but certainly some cases in Canada as well. Is there an option there for you, not to be cynical, but to increase revenues by increasing prices a little bit?
I think the key thing is a little bit. So in line with CPI, perhaps.
Right.
But, I think where the industry gets into trouble is when there are these predatory sort of pricing practices where you really jack up a price, on a mature or old drug simply because it's the only thing available. And then eventually somebody will genericize it for some competition and bring it right back down. So no, we don't have anything like that in our portfolio. Everything, in Canada, it's tightly controlled. Pricing, through provinces and private payers, PMPRB for patented medicines. In the U.S., it's controlled through, some of the buying groups, the institutions. So, there's pretty tight controls on it through most categories. And for us, we don't have anything where, we've achieved the growth just through price increases. All of our price increases have been very moderate, kind of in line with inflation.
Got it. Which as an investor, I kind of prefer, even though revenues are nice. I think it's nice to be in business in a way that means you're going to be around for a while, that people aren't going to be gunning for you.
Yeah, I think, durable revenues is how we think about it. Let's do what will allow us to grow and maintain that revenue over time. I mean, these pricing practices, they may work for the short term, but it's certainly not a long-term strategy.
A very Canadian outlook of you, Ken.
Yes.
I think last, but probably not least, what do you wish, if you had a magic wand, you could do anything with your company right now, if you had the money or if you had the resources, what would be the thing that's on your to-do list that you'd really like to get done that would be most transformational for Medexus?
Yeah, most transformational for Medexus is get Treosulfan approved.
Yeah.
Clearly, we're working towards that. So, I mean, that would be a massive change in the organization. So we continue to push hard on that. We're at 100 million now in revenue. Treosulfan on its own could be 100 million. So clearly, that's absolutely transformational. And then it's looking for other opportunities like Treo. I mean, continuing to build the portfolio. I mean, even with Treo approved, that's still not the destination. We want to get much, much bigger. As we get bigger, we get scale, and we start to get, better valuations for being, a larger company.
I know that you don't want to put timeframes on Treo because, once burned, twice shy. But there's a lot of investors sort of watching the clock on that one, thinking any month now there should be some clarity. Do you think that's likely, or are you really just sort of letting it play out?
Yeah, we said a few months ago that we'll think it'll take 12 to 18 months to get the data collected and get it formulated and resubmitted. So we're still sticking with that sort of timeline. Obviously, we're pushing as hard as possible to try and condense that. But yeah, I think that's what people should still, keep thinking about. as we make progress, and if we have anything substantive to say, we'll certainly share it with the market.
In the meantime, there's a target-rich environment out there for other opportunities.
Absolutely. Our base business is really strong. We'll keep focusing on that, keep growing that, and keep looking for the next opportunity.
Good stuff, man. Look, every time we've talked, I've said it. I appreciate the fact that that you guys are building a real business out there, and that despite what the stock price has been doing, if I think if you IPO'd with what you have right now, you'd be looking at a market cap that's 4 to 8 times what it is. So, sometimes it's just, it just sucks to be a public company.
Yeah. Head down, keep building the business. Eventually we'll get the recognition perhaps we deserve.
Good enough, man. All right. We'll talk to you soon.
Good to see you, Chris. Thanks for the time.